Well, it just might be the biggest insider trading case of all time. SAC Capital Partners founder Steve Cohen being investigated in connection with a $2.76 billion insider trading scheme. Joining us now is former investment banker Carol Roth. So, Carol, first of all, let's talk about insider trading in general. A lot of people wonder, it depends on the prosecutor, what insider trading is. Do you know, can you define clearly for me what insider trading is?
Sure, Dave. I'll go ahead. Basically, it's anything where there is a trade on material, non-public information. So information that the general public wouldn't have access to.
Okay, let me stop you right there then, Carol. If that is so, what about a Warren Buffett say? And I'm not picking on Warren Buffett. He's a great investor. He makes money for the entire economy. But he gets a private meeting with Tim Geithner back at the height of the financial crisis. Tim Geithner tells him stuff about Goldman Sachs that kind of assures him that investment in Goldman Sachs might be worth it. He ends up making a $2 billion profit from that investment. Could that not be considered, from your definition, to be insider trading?
I think that's the crux of the issue. It's very difficult to decide what's proprietary research and what is material non-public information. And I'll take it a step further, David. I'm not sure that insider trading and having that information is even a bad thing. If you think about the crux of the markets, what is it that makes a market efficient? It's getting information into that market as quickly as possible. So if the goal for all of the players involved is to have as much information in the market to be able to trade on, then having the incentives to get insider information would do that and expedite that process.
Carol,
so from my perspective,
Carol, Gerri Willis here. It's Gerri Willis.
I know, Gerri. I recognize
so here's the problem with what you're saying. Here's the problem with what you're saying. You take away any semblance of an even playing field for individual investors. Let's review the facts of this particular case that's in the crosshairs right now. What essentially happened is that a drug coming to market to cure Alzheimer's, there was information about whether it was doing well, whether it was effective. And that information was leaked to one of the nation's biggest trading entities.
Hedge funds, right.
And this was a cheat. This is a total cheat. There is no question whether this is an efficient market. Are you kidding me? Nobody else would have had access to that information. This was proprietary information. This is individual investors are getting hurt in this, and this is why folks are staying home.
Gerri,
and they're not investing because they don't believe in this market.
Carol,
and that's
go ahead.
a disaster.
But Gerri, that's the question. Is the other side really getting hurt by not having that information?
Yes.
And aren't they better by getting that information more quickly?
This guy made $200 million.
But Gerri, the fact that this guy made a lot of money doesn't mean necessarily that other people were hurt, does it?
But I couldn't make it because I didn't have access to that information. That information was used wrongly. It was not his information to use. He did not own that information.
But I guess
it's
the question is,
unfair, and it makes it unfair for individual investors.
Go ahead, Carol.
So, but here's the thing is that the market, there's always somebody who's going to have an advantage in the market. Somebody's going to have a faster computer. Somebody's going to have a better algorithm. Somebody's always going to have something better than somebody else. That's sort of the way the world works. By getting that information to market more quickly, then the rest of the investors can benefit from it. By this guy making money, the other investors didn't lose out. If they wanted to buy that stock, they're not buying it more.
So what Carol is saying, and Carol, forgive me for paraphrasing, but what Carol's saying is that there is something unfair about the speed of trades that the normal retail trader won't be able to ever match,
right?
And the kind of information that folks get.
And Carol and Gerri, I mean, they're both great points here. And I think, Carol, to your point, this is about a victimless crime. Remember the insider Raj Ratnam basically said, there are no victims here, really. The impact of what I did was dissipated through the markets, so I deserve a lighter sentence. But wouldn't you argue, perhaps to Gerri's point, that the market is the victim here, the integrity of the market? This really is not a victimless crime.
Okay, last word to Carol. Go ahead, Carol.
I would say the markets are a victim because it is currently against the law. But if you opened it up and allowed people to do this, that information gets into the market more quickly, and then the market is able to synthesize that information and make it more efficient. So I think over time, I'm going to say that it absolutely, the markets aren't a victim, Elizabeth.
Carol, I saw Gerri shaking her head no, so we could continue this debate for a long, but it was a terrific debate.
I would love to.
I'm sure you will on Gerri's show eventually. Carol Roth, good to see you. Thank you very much. Appreciate it.
You too.
Well,